You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. It is time to see what's cooking in these vol markets. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which all of you are just sucking down the bandwidth these days. It's okay. There's more where that came from. Even if the bills last year were higher than ever. You know what that means? That means there's more audience, more listeners than ever. So we love you all. Keep sucking down the bandwidth. We don't judge over here. Of course, if you like what you hear, this show, anything else we do on the network, even for a lot of you new folks, the algorithms love the new stuff. So if you, whatever platform you're getting it on, you know, your Apple, your iTunes, your YouTube, Audible, Google, doesn't matter, Spotify, it's on all of them. Then make sure you're leaving a rating, a comment, a review, whatever your platform lets you do. All that stuff in aggregate helps new people continue to discover the shows. And of course, if you too want to discover more great content, you want to dive into options oddities immediately after Volatility Views, you don't want your broadcast week to end. I get it. Only one place to go to keep the party going, theoptionsinsider.com/pro. Welcome to all the new folks who've been joining us. We had our buddy the Meatball kicking off the Pro Q&A hot seat for us earlier this week. A lot of new names in there. Always love to see new people playing along, joining the Pro, asking great questions. That's what it's all about at the end of the day. It's a participatory thing at the end of the day. So we love to see. Welcome to all of you folks who joined us late last year and indeed in the first few weeks of this year. A lot of fun going on. theoptionsinsider.com/pro. Just checked it. It's exactly 300. In fact, now once that panel goes up, which should be any minute now, 301 episodes waiting for you on that exclusive. That's a boatload of content, listeners. That is weeks worth of exclusive content sitting there the second you hit that button. Plus live streams, giveaways, all the other fun stuff that we do. And exclusives like that panel. That panel was no mean feat to get access to, listen. You had to come to a conference. You had to fly in, probably. Chicago was frozen. You had to pay the admission, all sorts of fun. So instead, we hand it out to you folks over there. theoptionsinsider.com/pro is the place to go to learn more. As we go around the horn, see who's joining us today on the old Volatility Views show. First, we go out to the balmy, some might say tropical, southern volatility mecca known as Austin. What's it, 90 degrees down there already? Where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir. How are things in the southern volatility mecca?
Oh, things are great. It's good to be here.
And also joining us from a little bit closer to home, a little bit chillier area known as Chicago, we are joined once again for the first time in the new year by our old buddy, Mr. Scott Nations, the president over there at Nations Indexes. Scott, welcome back to Vol Views and indeed to the network for the first time in this mad new year of 2024, sir.
Thanks so much. You know, it's going to be a great year, interesting year, and I'm glad to be back.
It's already off to an interesting start.
Yeah, we're glad to have you.
Yeah, so let's get to it. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down the week that was and indeed still is some vol trading and trending and analysis and all sorts of fun perspectives. And last week on the show, we had our buddy, Mr. VIXologist, actually Mr. Jim Carroll, breaking down his very detailed report on the key takeaways from the vol market in 2023. If you missed that show, first off, check it out. It was a great one, even if I do say so myself. And then B, make sure you reach out to Jim. He will send you a copy of the report if you ask nicely. So very interesting data out there, but it is still the start of the new year. As I mentioned, it is Scott's first appearance with us in the new year. So Scott, let's start by taking a moment to look back. When you look back at the crazy vol market in 2023, what stands out to you? What were the highlights and the lowlights and the takeaways you think people should be taking away from that market last year?
I think the interesting thing is the divergence we saw between indexes, both absolute return, relative return, and volatility. The NASDAQ 100 could do no wrong. The S&P 500, it did pretty well, but the Russell 2000, that boy, it was always bringing up the rear. And we're now in a situation where, and we have been for quite a while, where Russell 2000 implied vol is leading the way. It's higher than all of the other major asset classes. And if you follow us on Twitter or now X at nations_indexes, you'll see the team post some of this information in graphical form, really interesting graphical form. So I think it's interesting that the index that was bringing up the rear, that is the Russell 2000, and was technically the least volatile of all the big ones last year, has the highest volatility right now. I don't know if people think it's going to head off a cliff or it's going to be the first one to head lower if everything starts breaking or what. But I think it's the divergence was really interesting in 2023 and generated lots of trading opportunities.
Yes, small caps very much on our radar. You're right. Towards the tail end of last year, Q4, all of a sudden we started to see Russell 2000 starting to play by the beat of its own tune, it seemed like, out there, just kind of doing its own thing and becoming more interesting as a result. So that was definitely one of my things to watch coming into this year as well, is what's going on in the world of small caps versus all the rest of the other indices we watch here day after day and week after week. So you're right. Small caps very much a big part of the story. We talk about them a lot on our This Week in Futures options show, listeners, and we did for a long time where the volume and let's say your typical run in a week was, if it was north of 10,000, that was a banger week. These days you're seeing 50, 60,000 contract weeks on the regular, which is, again, it's not an E-mini S&P or anything like that, but it's compared to what it used to be, 4X, 5X, 6X, depending on the week out there. That's definitely starting to trend in the right direction. So folks are clearly discovering small caps now with the addition of the 0 day, which Scott, I know is your favorite thing, adding the 0 day contracts and now completing the calendar in Russell 2000. That'll also make things more interesting. By the way, Scott, like I mentioned, I did the options panel last week at the Stack show. I should have brought you on it because almost the entire thing, Scott, was 0 day. And I can't imagine something you would enjoy more than talking about 0 day options for an hour, sir, in front of a room full of people.
Well, I don't know. There are things I would probably enjoy more, but listen, it's the important topic in the option world right now. It is. It just, no matter what you think of them, it's the important topic right now.
That it was, and we spent a lot of time talking about it, so look for that on the pro side. Listeners should be hitting that feed sometime soon. Well, let's go around the horn. Let's fast forward to this week, obviously coming into another weird end to another weird week out there, listeners. Market's kind of struggling to figure out their direction today. Got kind of a slightly mixed bag. S&P off slightly coming into the start of the show, about 0.15%. Of course, coming on the heels of this inflation data we're seeing out there right now. NASDAQ off about 0.33%, so still kind of reeling from the gut punch that Tesla gave these markets earlier this week with the pretty terrible earnings. And then Dow managing to lead the pack to the upside ever so slightly, up about 0.07%, 0.08% right now. So not a huge banger day for them. Not even a huge banger day for our old friends, the small caps, off about 0.15% or so coming into the start of the show. So again, another one of these days where it seems like we're kind of treading water, trying to figure out where we want to be. Of course, as we all know, this could change on a dime. We could be up or down 1-2% by the end of the show very easily in these markets. So we'll keep our powder dry throughout the rest of the show and see how this evolves. As we kicked off the show, VIX cash is right around a 13.25. I put it down about 1/4 point on the week. Again, kind of getting back to the point we were making on the show last week. Even in spite of all of this rally we're seeing out there, vol is not exactly coming off with any sort of aggression out there. We had a hard time breaking into the 12 handle and staying there for the better part of the last week or so out there. Now back pretty much north of a 13 handle again, pretty much unched on the week from a vol perspective, which we don't see out there very often. VVIX also staying right around the same level at about an 80. It's down slightly, down about 2 points from where it was on the week, but a lot to unpack out there. Let's go out to the Southern Volatility Mecca first. Mr. Mark, sir, what's been catching your eye out there in another weird volatility week?
Yeah, the market keeps bouncing off 4,900, trying to get over there, and is now fail. Right now, if it closes down 6 points today, it'll be the third day in a row that it touched 4,900 and then failed. You got to wonder whether it's consolidating. Vol, it's interesting that vol is coming off as we sell off a little bit. I think that shows you how kind of bid everything was. The semis have been kind of carrying this rally has been very narrow. I think that's the big thing. RSP, the equal weighted S&P 500, is down on the year. Meanwhile, the S&P is shot up. And that's basically because we've seen a big run in NVIDIA, in Microsoft, in Meta, and that's really what's driven things. I think when I look at VIX, it's telling me that there's some fear out there a little bit. 1335 doesn't sound high, but actually, given the movement we've been having, it's a little elevated.
1335, yes. So who'd have thought that would sound elevated? Given where we were not too long ago, the 11 handle, where we ended the year last year, 13 and change seems pretty frothy. I'll take a 13 handle over an 11 handle any day of the week. Mr. Scott, same question for you, sir. Obviously, another interesting start to the year from a vol perspective. What's catching your eye out there this week and indeed in the opening month of this year, sir?
I think the interesting thing right now is that the 10-year yield is creeping back up and stocks don't seem to care. So earlier in the day, the S&P 500 made a new, new 52-week high. That'd be a new all-time high, wouldn't it? And that's despite the fact that the 10-year yield is up 1.5 basis points today and is well above 4% once again. So 4.15% in the 10-year yield. And, the 10-year yield could not stay below 4%. It's come back quite a bit. Now, it's not at 5% like it was last year. And so you wouldn't expect stocks to be particularly nervous. But I think people have to be watching that. And maybe that's why the S&P managed to give back all of today's gains and is now a tiny bit lower. You got to be paying attention to that sort of thing. And maybe the market is saying that the Fed's not going to cut a bazillion times this year. Maybe the Fed's only going to cut 3 times this year, and that would be fewer than expected. And so I think that's kind of what the market is paying attention to. Covered call strategies last year didn't pan out in general because the S&P blew through those calls all the time. I think that's really interesting. Today, I think it's interesting that you can pay attention to where the decline in volatility is coming from. It's coming from mostly puts. So tail decks down 4%. That's the measure of the cost, normalized cost of 3 standard deviation out of the money puts. That's lower. Our put decks, which we don't publish, is down about 2%. So while the VIX is down, 2/3 of 1%, that's largely coming from puts. And that's a little bit scary, the fact that people just don't respect downside right now in the S&P.
Who needs downside, Scott, when we're at all-time highs? Have you heard the magic letters of AI? It's going to carry us all to a bright and glorious future. You don't need puts anymore, Scott. The AI will take care of all of that for us.
Well, you have more faith in AI than I do. And while that may be a great thing for NVIDIA, not certain how it's going to help Costco or Walmart or Ford or any of those other companies that are so much the S&P 500.
The AI robot loads your bag and then it carries it to the car for you. Perfect. Costco. There we go. AI. Bam. AI buys your puts for you at the perfect time on the way down, Scott. You don't have to worry about those things anymore.
We'll see about that. I've heard people talk about those sorts of programs before. They don't tend to work.
The market seems to outsmart even the brightest, most cutting edge AI these days. Let's keep on rolling. Let's see what's cutting things up out there in the land of the volatility surface. And coming into the start of the show, things were a little bit down. I'm sure if we rack these now, it might be a little bit closer to flat. Feb future, when we came into the start of the show, was down about 0.5 point, and the March future down a little bit more than that, down about 0.6 of a point. If we keep going out all the way out closer to the election, obviously our vol tends to creep up. Listeners, we don't used to have easy 20 handle at that level, if not more. Obviously, we've come off quite a bit since those days of about a month and change ago. Now the highest we get on the curve going all the way out to, let's say, September is right around a 17.5, pretty close to about 1740 and change out there. So obviously much frothier, much higher than we are right now, but also not quite at the levels we were talking about even a month ago out there. So intriguing things for all of you out there who are betting on the election to juice up these vol markets. They're betting on more juice, but maybe at least not right now, not as much as perhaps you might be expecting. Mr. Mark, we'll start with you, sir. Anything catching your eye out there in the volatility surface this week, sir?
Yeah, I mean, I still am impressed by how suppressed the front and second month futures are. Feb and March just seem way too cheap to me, going all the way down the curve. The spread between Feb and the cash index is 0.6 of a point. That's really, really, really tight, given how much time there is to expire. And March at 1507 doesn't seem excessively expensive either. I think the curve is shockingly depressed. I'd like to see, I don't fully know how to comprehend why it's doing this, where the pressure is on these futures, but there is a lot of it. And so if we do get some sort of sell-off, we could see a pretty strong move in the volatility futures relative to what we would see potentially in the S&P if it does sell off.
Yeah, you're right. I'm looking at the numbers right now, and I'm hard-pressed to think of another time recently where we saw that front future so close to the cash. You're right. Usually it takes some time, listeners. You need some of that air to come out of the balloon before those two can get a little bit closer. In the past, how much have we talked about? How often have we talked about that chasm between the front future and the cash? Usually it's at least 1.5 points around this time, maybe recently even as high as 2 points. And right now we're well below that out there, which again is kind of fascinating. Gets back to Mark's point about maybe is the front portion of the curve a little bit depressed? I don't know. Mr. Scott, what are your thoughts on what we're seeing out there on the vol surface right now? Do you agree that maybe things are looking a little bit perhaps depressed right now?
Yeah, they are. And I think part of that is the fact that, as you said earlier, I mean, some people are going to say, why do I need options if the stock market's just going to make all-time highs? I'll buy a perpetual call option in the form of shares, and they can only go higher, right? They never go lower. I think that's part of what's going on. There's been relatively little in the form of kind of sickening moves to the downside. I do think, though, that I also think people are going to watch this big purchase in the Feb VIX calls. The 17 calls saw a huge buyer. What is it, about 10 days ago now? They paid 67 cents for 236,000 of those calls. And they actually were looking really prescient at one point. They were looking really smart at one point. Now with the S&P making all-time highs or near all-time highs, and vol coming off a little bit. They're underwater on that, which was probably a big hedge against a long equity portfolio. So they can't feel too bad about the fact that their hedge isn't working out. I mean, that'd be a little bit like being disappointed that you paid all those life insurance premiums and didn't get to collect. But every once in a while, you'll see people step in just a little bit and buy some protection, just not nearly enough to get the market, the vol market, kind of where it should probably be, given that the Fed's going to be really active this year and we're going to have a really contentious election.
Yes, that was a huge print. I do believe the single largest block print of calls in VIX options history, nearly 250,000 contracts. A big print, listeners. We polled you folks when it went live. Of course, I do believe slightly over half, somewhere around 55% of you said you wanted to buy those as opposed to sell those. So you were liking those, and you were looking pretty good. Even as recently as last week, these were printing over $1. So they were up on this trade, as Scott mentioned. Now, of course, not so much, but you got some time left on this one. So for all of our listeners out there who wanted to buy these, we'll keep an eye on them. Are they still open? I guess let's go find out, listeners. Let's move on into the VIX options portion of the show. Is today a rock'em sock'em robots day for VIX options? I guess it kind of depends how you're looking at it. Lately, we've seen some snoozers. So by comparison, today is a pretty action-packed day. 378,000 contracts on the tape right now, listeners. That looks even better. We see the ADV has fallen back down to 634,000. That's down about 50,000 contracts from where it was this time last week. So like I said, there were some sleepy days this week out there. So today, by comparison, looks like a comparative explosion of paper. Before we get into this week's action, let's break down the top 10 positions out there. Let's see if our old friend, the Feb 17s, are still open out there. By the way, if you're thinking this is the week, listeners, we got up to about a 15 handle ever so briefly in VIX last week. Someone clearly had to buy some puts out there, maybe 12 halves, maybe 13 halves. Maybe this is the week that a put is going to make its way into the top 10 size positions in VIX options right now. Once again, you are disappointed now for how many weeks in a row. I've lost track. It's been all calls all the time for as long as I can remember now on this show. And that is the case again this week. Cost you 170,000 contracts to break into the top 10 in VIX land this week. That's respectable. It's not explosive by any means. That gets us to the Feb 19. So again, compared to some of these strikes we're going to talk about, the 19 seem pretty reasonable. Number 9, 186,000 of right back at it, listeners. The April 60s, one of my favorite strikes on the board out here right now. Number 8, 206,000 of the even more reasonable, easy for me to say, the even more reasonable Feb 16s. So if you don't like the 17s, allow me to present the Feb 16s, probably trading for around that same level right now. Number 7, 213,000 right back at it. The May 47 halves. If that's too far out for you, listeners, but you really like that strike, allow me to present number 6, 215,000 of the March 47 halves. What could go wrong? Why wouldn't you want the 47 halves in your back pocket? Number 5, 218,000 of the Feb 18s. Again, comparatively very reasonable. Number 4, 221,000 of the Feb 30s, right back up there again. Number 3, 238,000 of the March 20s. Again, compared to some of this other stuff, somewhat reasonable. Number 2, 346,000 of the Feb 20s. And take a guess, listeners, what could possibly be the number one size position out there in VIX options right now? If you were paying attention to what Scott said just about 3 minutes ago, then you should know the answer out there, listeners. Yes, it is our old friend, the Feb 17s, now with nearly 400,000 open on this strike, 396,000 contracts. It seems like either our friend has come back to play or he has inspired quite a few others, because these things have been trading fairly actively ever since that trade went up, which was back on the 12th, listeners. We saw nearly 300,000 trading in total just that day. Then we saw on the 16th another 32,000, 17th another 68,000 almost. So this strike has been hot and heavy ever since that print went up. So intriguing. We often see a big print can sometimes drive some imitators out there, maybe some folks fading it as well. But either way, a lot of OI now, nearly 400,000 contracts on that strike. So everyone is now razor focused on the 17th strike. Let's keep on rolling out there to the action. Like we said, today, a respectable day, all things considered. 378,000 contracts on the tape. Most of that thanks to the April doubles, the April 55 calls. going up for size today, 75,000 times, followed by right behind it, the April 20s. This got me thinking before, I think this might be part of like I think there was a ratio before on this. Now it does seems like it's almost 1-to-1, 50,000 of the Feb 20. So if this went up as a ratio, they did it almost 1-to-1, which is kind of interesting. You're getting obviously a little bit extra and that's also a weird 2055. I don't know. We've seen weirder things on here. I'm not always a huge fan of these really, really wide VIX verticals, but clearly someone might be to the tone. Look and see if this one up as a spread. I don't. No, they went up about an hour and 50 minutes apart. So it looks like a duck. It just doesn't quack like a duck, which is kind of interesting. All right, so it's not a vertical. It's just a lot of upside action in April to kick it off, followed by number 3, 50,000 as well of the April 40. So that might be the other side of that spread. It might have been an April 20 40 vertical out there instead. That certainly lines up a little bit more. Yeah, it looks like that's how it went up. 25,000 times. Looks like, again, kind of an exact mid-market execution. Probably a buyer if past his prologue. And doing it again, looks like a total of 50,000 times today. So hence all this paper we're seeing out there right now. And then 20,000 of the Feb 14 puts for number 4 and 15,000 of the May 30s for number 5. Yesterday, kind of an anemic day. Only 287,000 contracts on the tape. Again, these April doubles just leading the dance again yesterday. 75,000 again, so 2 days in a row. 75,000 of these April doubles going up. They were opening yesterday. It's possible, I suppose, they were bailing on these today. That would be pretty funny, a one-day April double trade. Number 2, 18,000 of the Feb 12 half puts. Number 3, 12,000 of the Feb 20s. Number 4, 12,000 as well of the Feb 13 half puts. And rounding out the top 5 on a pretty light day, 11,000 of the Feb 14 puts. Getting out to Wednesday, a little bit more respectable, 499,000 contracts on the tape. No clear dominant print like there was the other days of this week. The big dog, 33,000 of the March 45. So getting back up to the upside, listeners. Number 2, 26,000 of the April 13 puts. Number 3, 25,000 of the Feb 13 half puts. Number 4, 20,000 of the March 14 half puts. And rounding out the top 5 on a decently active Wednesday, 17,000 of the Feb 24s. Tuesday was the banger day of the week, 1.1 million contracts on the tape. The big dog on Tuesday, 70,000 of the Feb 12 half puts. So again, puts are printing for size and they're opening. It's not enough to make it into the top 10, listeners. Number 2, 65,000 of the Feb 20s. Number 3, 54,000 of the Feb 40s. So again, looks like maybe some 20-40 vertical action. Number 4, 50,000 of the June 47 halves. Like, people love that 47 half shot. They cannot get enough. They're in March, they're in May. Now, clearly, they're in June as well. And number 5, 49,000 of the Feb 30s. And then Monday, a respectable way to kick off the week, 719,000 contracts. The big print kicking it off, 86,000 of the April 20 calls, followed by 75,000 of number 2, again, of the June 47 half. So this love for the 47 half strike, listeners, it kind of just mystifies me. Number 3, 40,000 of the Feb 16s. Number 4, 36,000 of the April 16s. And number 5, on a pretty active Monday, 35,000 of the Feb 16 puts. All right, Mr. Mark. An interesting week, kind of an anemic week in some days, and other days, like Tuesday, putting up over 1 million contracts. So a very weird staccato week in terms of volume out there. What's catching your eye out there, and what are your thoughts on some of maybe these potential verticals we're seeing going up today and indeed yesterday, and also this clear love for the April doubles as well, sir? Have you noticed those?
Yeah, that was a pretty big order on those April 55s yesterday. They bought a bunch of them. And, you've got more going up today. You got the 20 call, the 20s, the 40s, like it's a busy, there are some active hedgers going on in the VIX. Now that it's down here, it makes some sense. You had March and Feb busy on Wednesday. So we're seeing call love, which makes sense with where volatility is with those VIX futures, as depressed as they are. It's really inexpensive to step in and hedge. And, we get a little bit of selling. As I said, when we were talking about the futures curve, you could get a lot of, you could see vol really pop in in those options. VVIX is only 80. So, we get a rally up to 15, 16, 17. You're going to see that VVIX pop to 100 really fast, and those options that they paid, pennies for will double or triple, and, without ever really getting to 55. That's one of the things people don't realize is sometimes when I'm buying an out of the money call, it's really more of like a skew trade, a curve trade, where I'm looking for skew to increase and vol to go up more than I'm looking for the VIX to completely blow up. Obviously, you like that if that happens, but I don't think that's fully their intent here in this trade.
Gets back to one of our favorite topics here on the network: the garbage VIX calls and the garbage S&P puts, and what it takes to make those things actually pay off. Might surprise you, listeners. But Scott, you're just talking about our old friend, the Feb 17s. That's getting a lot of attention out there right now, but as Marcus pointed out, seems like maybe we're finally getting back into that season where upside is cool again out here in VIX land, and all sorts of upside. Not just the 17s and the 20s, but the 20-40 verticals and the 55s and the 47 halves and all of this other fun stuff. Are you noticing this and any other trades out there catching your eye out there these days, aside from the massive print of the Feb 17s?
Well, in that Feb expiration, all of the strikes from 16 to 20 inclusive now have pretty good open interest. That's to be expected. When you have a giant trade like the 17s, people are going to get interested in that swath of the skew, and they're going to end up trading it all against each other. They may end up with some sort of butterfly or some sort of thing. So it'll be interesting to watch what happens in the VIX world if VIX is between 16 and 20 at that February expiration. Then things could get a little bit messy then if that were the case. I'm also looking at this, as you pointed out, the April 2040 vertical. It does look like that's what it is because they traded as a spread. The condition is a spread. They traded two hunks, 25,000, and then one short of 25,000. Just at the same time. But when I look at something like this, it looks like a spread now, but pretty soon it's not going to trade like a spread. What moves that 20 strike is no longer going to move the 40 strike. There's the potential, and we used to see this every once in a while. The potential exists that somebody wants to be short these calls, and they want to be short these April 20 calls. But the risk manager won't let them be short them naked. And so they say essentially, if you're going to short the 20s, you got to be long something, and maybe it's the 40s. And I think that's part of the reason that we see this thing trading kind of like a spread. But again, in short order, it is not going to trade like a spread.
Lots of fascinating stuff to unpack there. Let's keep on rolling. Some other fascinating products in the world of volatility. Listeners, when I was getting ready for this panel last week, I was going over my notes from the last time I did this panel, which was exactly 2 years ago. And it was kind of fascinating to see the things everyone was up in arms about and wanted to talk about 2 years ago versus now. And one of those big talking points from 2 years ago was a lot of hand-wringing about the return of this next product, which is SVIX, the return of inverse volatility. How could the regulators have possibly greenlit something like this coming back to the market after what happened back in Volmageddon, February of 2018, with everyone's favorite XIV? Of course, there was a lot of talk back 2 years ago, about whether our approval levels in the options accounts that we've gone by forever, level 1, level 2, level 3, whether they're even sufficient to cover something like this, or do we need an entirely new way to measure the risk of an options and derivatives account as a result? So that was a hot topic 2 years ago. Fast forward to now, not so much. SVIX coming into the start of the show at about a 40 even, so SVIX has certainly been tearing it up over the past year. Performance-wise, it's done well for all the folks out there who've been buying it and doing things like overwriting against it out there. That puts it up 1.25 points from the show last week. Of course, on the volume front, this is where things tend to fall apart. About 1,500 contracts on the tape. That's against an ADV of only 3,500. That's down a couple hundred from the past week. So 2 years ago, on the onset of these products, everyone thought this was just the canary in the coal mine of an explosion, a new wave of exotic inverse volatility products, and they're taking up all the oxygen in the room. I'm sure exchanges like SEBA were also hoping that this was going to gin up a lot of VIX futures volume as a result from all of the hedging going on with these products. And then it turns out not so much. It's performed well, but from an options point of view, hasn't really let the world on fire. The big position out there, such as it is, 2,300 of the March 45s, followed by half as many 1750, or a little more than half as many of the 1750 of the, what are these? These are the March 50s out there as well. So a lot of March upside hanging out in the top of SVIX. This would have seemed, the 50s would have seemed outlandish just a month and change ago. And now, of course, we're setting new highs out here in SVIX all the time. So at a 40 right now. So a 50 handle by March doesn't seem as crazy, even though where does VIX have to be if we're getting to a 50 in SVIX? These are questions you kind of have to start asking at these levels of SVIX. Mark, I know you've been playing around in SVIX. I think you said you got called away recently on some of your calls. Have you gotten back in? And I know you were debating last week which route you were going to take, whether you're just going to buy it or you're going to sell some puts. So which way did you end up going?
I'm buying it and collaring it is the trade I'm setting up. So I'm long the stock, and then I'm long May 35 puts against the 45 calls for even money. So that's my approach to what I'm going to do in SVIX.
You're not blasting away on these 50s. I thought for sure those 50s were you, sir. I thought that was you, all 1,700 of them. Ooh,
the 50s are pretty juicy, actually. You're getting some pretty nice juice there. Maybe I'll adjust this thing and sell those. Wow, $1.50 for the 50 calls in May. That's not bad.
It's not the worst thing I've heard, sir. You'll take 10 more handles in SVIX. Sure, why not? VIX at an 8. Why not? Why not? Mr. Scott, same question for you. Like I was joking earlier, this was all the rage a couple of years ago. A lot of hand-wringing about the return of these products. Underlying-wise, they performed all right. On the options front, where everyone was doing the hand-wringing, not so much. Is this an area you're still even paying attention to, the inverse vol land, or is it kind of under your radar these days?
No, I think it's if people want to trade this product, I think they should probably be able to. I hope the people who do understand what these short vol strategies really mean and how they really work. I think people's eyes have been opened. So, for example, if you look at the vol space or you look at the option space for SVIX, I'm looking at the June expiration and the $1 puts. So right now it's the ETF or ETN is trading $40, just about $40 even. The $1 put is offered at 15 cents. The $9 put is offered at $1. So people have figured out that these things can go to zero. They can go to zero overnight. And these things and the options are priced accordingly. And this, these $1 puts, they're not just hanging out there. There's 118 contracts open interest in those. So, I mean, if you pay 15 cents for those, you're not paying very much money, but you really have to think the world's going to come to an end. And all of a sudden when it does. So this is not something I pay attention to very much. It's certainly not something I'm going to trade, but every once in a while, it's fun to look at. Just like, crude oil options were fun to look at in May and June and July of 2020 after crude oil futures had gotten to negative $40 in April. One of those things, please take my crude oil and I'll pay you to take it off my hands. It's something else kind of interesting is going on with SVIX puts.
Gotta love those. Those are kind of reminiscent to me of those old catastrophe puts we used to talk about out there in Tesla. People loading up on the one puts when the stock was around $100 and change out there. In fact, we were just talking about some yesterday. Not quite the one puts, but the 90 puts expiring today. So approximately 50% out of the money, trading over 10,000 times yesterday. Pretty close to it out there. So folks were throwing some money at some very, very aggressive downside yesterday in Tesla. Sounds like you could do the same if you are so inclined out here in SVIX, listeners. That's funny. Going back to our conversation about garbage puts before, listeners, those would certainly qualify. Let's keep on rolling. Let's go out to the sibling product, which does a little bit more paper. In fact, surprisingly today, catching a volume bid out there today, even if the underlying isn't. UVIX was at about 11.5 when we kicked off the show, puts it down about 1 point. Now it's starting to come in a little bit more, down about 11.40, down about 1.1 points as the show is progressing here. The ADV is 11,000, so that's actually down 1,000 from last week. That's probably going to change after today, listeners, because UVIX on a bit of a tear today, 25,000 contracts on the tape out there today. So clearly, the game is afoot out there in UVIX. Let's go see what's going on out there, listeners. And you know what? It's the April 12s. Again, I said UVIX right now, a little bit shy of 11.5, about 11.40. The April 12s trading 16,005 times today, listeners. Looks like paper cannot get enough of these things. They started buying them about 2,000 times for $2.70. And then as the day has gone on, they kept buying them 1,700 more for $2.70, 1,500 more for $2.70. That's their price, $2.70, 1,000 more, and so on and so forth, all the way up to 16,005, at least as of a few minutes ago. Yeah, they're pretty much still at that level, 16,000. So, yeah, you like those, listeners? April 12s, and again, they're not getting them for nothing. UVIX is a volatile product. You're paying nearly $3 for these things, so you need quite the aggressive move out here in UVIX to start making these things pay off. Again, we did see a decent pop just last week, so it's not unheard of that this thing can pop. It's just interesting. We haven't seen a size call print to the buying side in UVIX in quite some time, which is kind of fascinating. Let's see if that lines up. Looks like the most active, coming into today, listeners, this strike has also had some attention because coming into today, the largest open position was 4,600 of the April 12. So clearly, they've been playing on this strike here for a little while. Let's just look really quickly and see when they started putting these up. They started putting these up just yesterday. It put up 4,600 yesterday, and now another 16,000. So obviously over 20,000 of the April 12s trading in the last 24-hour period out here. So interesting. Mr. Mark, we don't talk about size upside prints in UVIX too often. Obviously, VIX, we just talked about a million of them. And we talked about some fun upside in SVIX for a variety of reasons. UVIX, we don't see it too often. So kind of interesting to see one standing out like this. What are your thoughts on these 20,000 now of the April 12s in UVIX for around $2.70?
Yeah, I mean, the UVIX is absolutely dying by the vine. They'll have to reverse split here soon, but it's interesting somebody stepped in and did this, that 16,000 of them. That is probably the biggest order ever in UVIX. It's coming in pieces and they are buying. They're paying $2.70. And they've been kind of slowly accumulating. They started buying today at, around 10:30 Eastern and have continued to buy all day. But pretty interesting, really interesting trading. But good. 270 appears to be their price. What do you think, Mark? You a buyer of those?
I'd have to stretch. I probably would go elsewhere before I loaded up nearly $3 calls to the upside in UVIX. Again, the same problem we have with VIX is even worse in UVIX. If you don't catch the apex in UVIX, we joke about having a few minutes in VIX calls, right? In UVIX, it's even worse. You have seconds, and then it just starts turning around again, and then you missed it. You had that brief moment, I think it was literally during the panel, it kind of distracted me last week on Wednesday when I saw these prints and I was like, oh, these are some good levels. I wish I wasn't doing a panel right now. I could be trading this. But so yeah, you have those brief fleeting moments and you're paying nearly $3. You got to make sure that works for you. I don't know, Scott, we were just talking about upside in SVIX, but here we go. Size prints in its sibling product, UVIX, on the levered side. What are your thoughts on the levered products, and are you a fan of size upside prints in these?
You have to be really committed. my system says that the implied vol for those April 12 calls, 130%. So,
that sounds about right.
It's the VIX and we're levered and okay. This is one of those places where a vertical spread makes much more sense to me than an outright call purchase. And I mean a vertical that really is a spread and is almost always going to trade like a spread. Mm-hmm. And part of the benefit is this thing showed like VIX products, like long VIX products should. This shows call skew. So as you get further from at the money, the call implied volatility actually gets a little bit higher and a little bit higher. So instead of just buying these 12s, how about buying the 12-14 and you actually get skew working for you a little bit? You reduce the cost of the whole thing tremendously. Yes, you limit your profit, but you kind of get the math working for you. That I would much rather attack this in that sort of way. And maybe you ease the need to time it perfectly when you do that.
Yeah, Scott, I like your idea. I was looking at the call skew, and you're paying $270 for the April 12s. The 28s are are trading 101, 110. So you can get some really, really nice premium selling that upside call skew against your at the money call. I think that's a pretty darn smart idea.
Yeah, that 1228, you reduce the cost of the trade by 40% by doing that. And okay, so you're giving up upside above 28 in UVIX. I'm fine with that because I'm not looking for the world to come to an end. I'm looking for the S&P to maybe roll over a little bit and things to get kind of ugly for a while, not for the apocalypse to happen. So
you're not a doomsday prepper, Scott?
No, and I got to tell you, I wonder if those preppers are angry every day the world doesn't come to an end.
Those missile silos aren't cheap.
That's kind of like your life insurance analogy, I guess, being a doomsday prepper.
Those guys have a garage full of freeze-dried food and bottled water and ammunition and gold nuggets and canned tuna. They got to be wondering when all that stuff's going to go bad. They got to be thinking the world needs to end in a hurry.
They spent all that money. They wanted it to come. It's like that show, The Last of Us, when the world comes to an end. The prepper is very excited because all of his stuff worked out. He didn't waste his money and his life. So yes, there is something to that. Speaking of you folks out there, listeners, we got a fun flash poll going on right now about these UVIX calls. So let's get out there and talk about that. I also have some other stuff. We'll get to UVXY and all that fun, I think, with these poll questions as well. Actually, before we get out of here, really quickly, Scott, it is a hot earnings week. I joked about Tesla at the top of the show here, but I saw you folks over there at Nations on Twitter have been tweeting out a lot of earnings vol products. You also have your Tesla Voldex and all that kind of fun stuff out there. So anything catching your eye on the earnings vol front you want to share with our listeners really quickly?
Yeah, we've again at our Twitter account. I'm still going to call it Twitter. It's always going to be their Sears Tower to me. It's always going to be Twitter to me. We have started. Joe and his team have started tweeting out some interesting stuff about the Mag 7. So we'll publish our option window for the Mag 7, which is a kind of a graphical description of the vol space, 30-day vol space in the Mag 7 names. Tesla for a long time yesterday was the worst performer in the S&P 500, down about 10% much of the day on disappointing forward guidance. Okay, I mean, it was priced for perfection. Interesting that implied volatility came in yesterday, and it just, to me, that shows the power of the catalyst, particularly when it comes to earnings. So yes, Tesla was down 10% most of the day. Implied vol was still lower because the catalyst was passed, even though the news was horrible. And I just think, if you're new to trading single name options, you just have to really be prepared for that. That what we always called the vol suck. That is, vol just comes out once the giant catalyst is passed.
And let's keep on rolling with the show, listeners. Got a little bit of time. Let's get into some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get to it, listeners, because we're coming up against it already. A lot of fun going on. Our keen-eared producers, while we were talking, threw out a flash poll. This is just going to be live pretty much for the duration of the show and for the next hour. So if you're listening on the podcast, it is already too late, which is why you need to be following us over there at Options throughout the week, listeners. They're asking you very simply, talking about the surprising action in the UVIX April 12 calls. Paper buying 16,000 today for approximately $2.70. Do you like these or sold to you? And right now, in the early voting, 100% of our audience saying sold to you. Not loving these. Kind of figured it would go that way, but we shall see. We'll come back to that at the end of the show and see how folks are hanging out. Our actual question of the week this week, listeners, very much germane to this show. We asked you, at the beginning of the year, we like to ask you a lot of broad questions to see how you're shaping up for the year and what you're planning to do and trade throughout the year. And we thought we'd ask you that along the vol lines right now, asking you quite simply, what is your preferred way to trade broad market volatility? We're not talking specific products or some specific volatility for a specific product. We're talking broad S&P index vol, listeners. Gave you a bunch of choices. You're playing old SPX and your SPY. You can throw in there your E-mini S&P options if you want as well. So go straight to the source. Maybe you're hedging, maybe you're not. Or you're going more to the vol complex, your VIX options and futures. Or maybe you want to go the plain vanilla ETP route, like your VXXs or that sort of thing. Or maybe you want to get a little bit spicy, a little bit crazy. You want to go inverse or maybe even levered. So products like UVXY out there right now. And I will say, just to, because we're coming up against it, it was looking pretty firm for plain old S&P options leading the dance 40+%. And then our buddy who was on the show last week, Mr. VIXologist, who I jokingly referred to as the captain of the UVXY Defense Force, he took umbrage at that. But I think, given what's happened this week, I am borne out here. He came in and started sending people to the poll saying, make your voice be heard. And lo and behold, somehow UVXY and the inverse levered ETPs are now winning with 40.6% of the vote. So I smell the hand of skullduggery, a.k.a. Mr. Jim Carroll, at work here, gumming up the works, listeners. All the UVXY Defense Force coming out of the woodwork for this one. Followed by now number 2, 35.9% for plain old S&P options. VIX coming in a distant third, 15.6%. So no love for VIX options and futures. And even less love for your plain vanilla vol ETPs. Mr. Scott, as someone who's put out a vol product or two in his day, does that surprise you? Of course, putting aside the blatant vote stuffing we're seeing in our poll right now, does it surprise you that maybe the S&P options aren't still taking it, sir?
The guy from Chicago is stunned that somebody would stuff the ballot box. No, this doesn't surprise me too much. Although I think that from my point of view, SPY options are the best tool going away. The very liquid markets, each of these options is nearly always 1 or 2 cents wide. So you don't have to be just so vigilant about your execution as you have to be in some of these other products. So I just love SPY options. I think that's the place to be.
Mark, are you surprised at this? And are you also surprised at the absolutely blatant skullduggery of a Mr. VIXologist, even though he pled innocence on the show last week, sir?
I am shocked and awed and horrified. Stupefied.
There's gambling going on here? What? Yes, so a little bit of it would. I guess it wouldn't be VolTwit without a little bit of shenanigans going on. So you have about a day or so left, so you can vote if you're listening on the podcast list. We make sure it works out that way, so you folks can play too on demand. As we keep on going into the final, most difficult, most dangerous part of the show, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we attempt to wrestle with the vol gods, see what they have up their sleeves for the coming week. Last week on the show was myself, it was Mr. Meatball, and the aforementioned agent of skullduggery, Mr. VIXologist, and I'm sad to say he was the closest. I don't like rewarding such blatant shenanigans. If this was earlier in the show, he would have won. He was at a 13.5. Now, thankfully, vol has come off a little bit. It's about a 13.33, a 13.32 now in the VIX cash. So he is outside of our 0.1 margin of victory, thankfully, because I'd hate to crown him the winner after such blatant shenanigans. He's banned from the show for life. Followed by myself, not looking good this week, 14 3/4 listeners. I was feeling a little bit more vol. I think I was influenced by that upswing we saw last week, which obviously in hindsight, not many legs to that, not much shelf life to that pop after all. And then the Meatball was feeling more. He was feeling a very palindromic 15.51. So no winners this week, even though Mr. Jim was the closest. And Scott, since our guest was the closest last week, that means you get the pride of place going first this week, sir. What are you feeling this time next week for VIX? And if you have another index you want to prognosticate on as well, have at it. Give you two shots to win.
Yeah, I'd like to look at our volatility index, VOLDEX, ticker symbol VOLI. So closed form measure of precisely at the money implied volatility in the S&P space, same 30 days as the VIX. 1105 right now. You would expect it to be a little bit lower than the VIX because it doesn't get muddied by skew and all that other stuff. But I think that vol is going to catch a little bit of a bid next week. And so I think VOLDEX, which again is ticker symbol VOLI, 1105 right now. I think it's going to close next week at 1150.
1150 in volley for Mr. Scott out there. In fact, that was one of Jim's I think better slides he had on the show last week. He was comparing, VIX to volley, and which is not a data point we see charted out too often. Kind of comparing the skew component, obviously, and that was kind of interesting out there. So as much as I ascribe shenanigans to him, he had at least one good chart last week. So I'll give him that. All right, and it involved your product, Scott. So a double win there. All right, Mr. Meatball. Let's see. I was closest. So I guess I'll go next. I'll be charitable. I'll let you go last. Even though I kind of screwed the pooch out here this week. Yeah, about a 13.30. Even with Tesla screwing the pooch this week, it didn't really do a lot to juice vol. A lot of people have been hoping that maybe earnings season would be the catalyst that would bring some vol back to these markets. So far, we're not seeing it, but we're still very early days. I'm not feeling a lot of optimism on the vol front, but I will say a little bit higher to keep things fun and interesting. I'm going to say 13 3/4 for VIX cash, so roughly about 0.4 higher than we are right now. All right, Mr. Meatball, you get the final say, sir. What is your palindromic nonsense for this time next week?
We're going to go with 1441, Mark.
Are you starting to regret this? It does limit your choices.
It does.
You have to make huge leaps. But hey, you're committed to the gimmick. I will give you that, sir. So 1441 for Mr. Meatball's palindromic nonsense for this week. All right. And that music means we have come to the end of another fun, interesting, head-scratching sojourn through the world of volatility. But before we go, listeners, let's go around the horn. Let's start with our guest, Mr. Scott, sir. Scott, you mentioned you're getting a lot more active on the old Twitter, and not just on your own personal handle now, but also the other nations' accounts. So if folks want to check that out for themselves, where should they go? What should they do?
The corporate account, the business account is nations_indexes, and we will post all sorts of interesting data and charts and graphs. Joe and his team do a really good job of keeping that up to date. And go and follow it and ask for something. If there's something you really like to see, ask Joe. He'll come up with it.
There you go. Ask Joe. Give them a follow over there on Twitter. It'll always be Twitter to me too, Scott, so don't worry. I'm not calling it X. So give them a follow on Twitter. A lot of great data coming out. You want things like the Tesla skew and vol impact post-earnings. That's all there as well. So not just index stuff, even though there's a lot of that as well out there. Give them a follow. It's easy for me to say. Give them a follow on the old Twitter. And, of course, you can check them out over there at Nations Indexes as well. And, Mr. Meatball, sir, if folks want to give you a follow, maybe they want to debate your palindromic nonsense, where should they go? What should they do?
Yeah, you can follow me on Twitter and go to optionpit.com. My Trader's Edge blog, I am putting out valuable content every single day. I wrote up a pretty interesting piece on VIX yesterday that is worth a read. And there is always more opportunity to find nuggets of, I think, awesome, actionable trade ideas. I'll be out with another one this afternoon.
That could be the name of your newsletter, Nuggets of Awesome. Check out the
Nuggets of Awesome. I like that.
I would subscribe to that. I would listen to that. I would read the Nuggets of Awesome newsletter. Oh, there's another new Nuggets of Awesome in my inbox. I would be excited by that. So there we go. Free branding advice. Check them out over there, optionpit.com. Give them a follow on the old Twitter as well at OptionPit, the place to go. You got to get on out of here, but don't worry if you're on the pro side. You get a fun bonus. You get an Options Oddities immediately after this show. Listen, we have to go catch a flight a little bit later today, so an early bit of Options Oddities goodness. Then we're back again on Monday. I will still be traveling back on Monday, so when the cat is away, the mice will play. So one of these other jabronis here will be hosting Option Block on Monday, so we'll see how that unfolds. I'm always terrified of that prospect. Then, of course, back again with all the rest of our usual content throughout the week until we're back again next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.